All right, I am back with Jeremy Pope, the Pope of Loans from PRMG. Hey, Jeremy.
Hi, how are you, Jennifer?
Great. How are you today?
I'm very good, very good.
Well, being in the real estate and lending industry, we get tons of people that ask about like credit score because that's part of what goes into getting a loan and getting a good rate and stuff like that. But
Absolutely.
what are some of the common misconceptions about like credit and credit scores?
Well, I'd say there's a lot of them, but there's three really big ones that I hear over and over and over.
And over and
and
over.
over. I think one of the main things is, there's people that don't have any debt, which is
Yay.
fantastic. That is amazing, right? But the credit bureaus then don't always have a credit score for you, right? So you have no debt, you have good income because you have no debt, and then you don't have a credit score, so you're kind of stuck. It's really shocking. It's really aggravating for that person because they're thinking, I'm doing everything right.
Right.
In America, we are flooded with debt. It's in the media. You hear about it all the time. And then you got that person that achieves the goal of no debt, and then they get penalized. Doesn't
Right.
seem fair. Doesn't seem fair.
Yeah, because your credit score is really a measure of how you carry and manage debt.
Correct.
That is
Correct.
interesting, though, as a concept that you get dinged for having no debt.
Right.
That's weird.
Right. It
Ugh,
is. It
we
is.
don't like that. Let's sign a
No.
petition.
So there's a couple workarounds, right? You want to have something reporting to your credit report so that they will give you a score.
Okay.
So if your house is paid off or your car is paid off, there's a couple things you can still do without going into debt. So if you just had a couple of credit cards, maybe 2 or 3 credit cards that were open and active with a zero balance, then you will have a good credit score, even though you don't owe any money on those cards.
Okay.
It doesn't seem right. You don't have any credit cards. You don't have any balances. You have some credit cards. You still don't have balances. But that is a night and day difference between those two scenarios and the credit scores that
Just
are
because
going.
of how they score it. Okay, that makes sense.
So
What's
I would
an
say, have those cards. You don't even have to use them once a month. If you use them a couple times a year, the creditor won't close them on your behalf. If you have a credit card that sits open too long, you're not using it, you're not doing anything with it, eventually they'll probably close it on you, and then you're back in the same boat.
okay? What's another myth that you hear a lot?
It's always talking about paying on time. I mean, it makes 35% of your credit score is making the payment on time.
Okay.
What I often see happen is, a credit card with a $25 minimum payment versus a mortgage $2,000 payment or a car $500 a month payment. It seems like kind of no big deal maybe on that credit card. It was only $25, no big deal.
Mm-hmm.
It's an equal hit. I mean, it's
Really?
gonna bring down the same. Yes.
Whereas
Yes.
if you didn't make your house or your car payment on time, not making your
Right.
credit card. Wow, I didn't know that.
Right.
Okay.
And I think too, people are confused a little bit about what a late payment even is.
Okay.
So if your credit card or your car or your house is due on the first of the month and you pay on the third, your credit is not being affected at all. You have to be 30 days late. So,
Oh.
if you got some small credit card balances out there, $50, $100, just a couple $100, I think those are the ones that are easy to miss.
Mm-hmm.
That'll cost you a lot of points. So if you've got a credit card with small balances, just get them to zero. Then you don't have to worry about it at
That
all.
makes sense. I like it. All right, you promised us three. What's the third one you're hearing?
So this one is all about the utilization rate. So what that is they're looking at the credit bureaus are looking at how much money you are spending versus how much money you're allowed to spend.
Okay.
So this is a little counterintuitive. This kind of drives clients kind of nuts because it doesn't, it's hard to wrap your head around. They would rather see you have, the credit bureaus would rather see you have, and will give you a lift in credit score if they saw you had a $10,000 limit, meaning you can spend 10 grand on the card, and you have a $2,000 balance, versus having a $300 limit card with a $200 balance.
Because you're using a bigger percentage of the allowable amount.
Yes, yes. And here's where it's the part that frustrates people is they think, well, and it makes sense. I agree with them. Isn't it better to owe $200 versus $2,000?
Right.
Yes, it is. But when you have a $200 balance on a $300 card, you're using 66, 67% of that card. They think you're too reliant on it and they're dinging you. On the $2,000 balance versus the $10,000 limit, you're using 20% of the card. So you are good at managing the debt, and they give you a higher score for that.
That's crazy. And how come you always, just as a side question, how come the three bureaus, you get like three different scores? Don't they measure it the same?
Yeah. Yeah. So TransUnion might put a little bit more of an emphasis on a collection versus, Experian or Equifax, or, Equifax might hurt you more on the credit for using too much of the card. They're all got slightly different models, okay. But as mortgage lenders, all of us use the middle score. I guess
like you average it, or you just take the one that's like in the middle?
The one that's in the middle.
Okay, got it. Interesting.
We do have tools though that we look at where credit is in tiers. So if you're at a 678 and you get a much better loan when you're 680 plus, I always look, hey, is there like a couple $100 that could be paid here on a card or a collection or something that'll bump you up just 3-4 points, get you into the next tier, get you better loans, get you better programs, better options.
What about if you have really good credit? I know that your credit score can be above the 800. Does that get you better options as well? Or does it kind of like once you're at a certain point, that's it?
That is one thing about the credit bureaus that it actually does make sense, which I like, is once you're above that 760 tier, you're kind of considered all top tier credit.
Okay.
I think they realize in the mortgage world that credit scores do fluctuate. So how are we going? We're not going to penalize somebody because they were at 800 and now they're a 780. Are they really worse? No, they're not worse. They're fine. Okay. So 760, if you can get to 760, you're good. Don't stress about it not being 840 or something like that. It's still grade A. Grade A, it's perfect.
I think that one of the big takeaways here is there's just so many moving parts, and there's so many facets to how, if you're looking to try to buy a house, credit score is critical. So like people need to get in touch with you to look at their specific situation, what makes up their credit, and then you can help them, if it needs to be higher, you can help them figure out how to do that.
Absolutely. Absolutely. The best way to do it is, just don't, talk to a mortgage lender and then want to go home shopping that evening. I mean, you're not giving yourself any time to get yourself into a better position. You can probably most people can get a loan that same day if they wanted to, but are they getting the best one? Sometimes not. So if you're thinking about buying a home or refinancing or something, start talking to banks 3 months, even 6 months in advance. We'll give you the advice that you need. Hey, pay this down, do this, do that, and then get yourself in position for the best loan possible.
So you're not paying so much later on.
Yes. I mean, tens of thousands of dollars in it.
Right.
Absolutely.
Exactly.
Absolutely.
Cool. Well, if people want to get a hold of you, what's the best way?
They can call my cell. That is, I know you were going to ask, 513-432-6971. I'm on social media as well. And of course, they could get a hold of you and then me. I mean, we're all a team. We're a family.
Perfect. All right. Well, thanks a lot, Jeremy. Oh, remind me which states you do loans in and can do
Um,
refis in.
Yes, Ohio, Indiana, and Kentucky. And then we do have a division at corporate. If you're in Florida, Texas, California, we can still assist in that too.
Perfect. All right. Well, thanks a lot, Jeremy. Have a good day.
You too. Thank you.
Bye.